Hello friends. Hi. Welcome to the Manthan series of BFM. Now in Manthan series, as you can see, you may be following this on a regular basis. In Manthan series, we are covering all the subjects, compulsory subjects, all of CIB. I am covering BFM and ABM module A and C, and BFM complete. Other mentors are covering various other subjects. ABM is covered by Supra ma'am also. AFM is covered by others. Then BRBL. Okay. So all the subjects are covered. Follow the series completely. Share it with your friends. Like this video. Subscribe to the channel. First do this. Here we are covering all the recollected questions from various exams. So it is very useful for you. Follow this video completely. Today my topic is facilities to exporters and importers. One of the important topics of your module A, BFM. So follow the video completely. Share it with your friends. Like this video. Subscribe to the channel. Do it fast. So let's start. Firstly, directly let's hit the topic without wasting much of the prologue, we can call it, or without wasting much of the time. What are the various policies? The various policies basically cover two types of policies, mainly duty exemption schemes and duty remission schemes. Understand this. See, this foreign trade policy of ours covers two types of policies. For exporters, mainly for exporters. See, we do mainly everything for the exporters. Why? Because exporters give us money. You sell the goods, then you get the money, isn't it? So that's business. We also give something for the importers. It's not that we don't give it for importers. We'll cover this. But importers is a lesser part because main is getting the money, isn't it? In your bank also, the one who does the sales, okay, the one who sells the products, who has more target, who covers more targets, that person will definitely get some higher advantage, isn't it? Branch manager loves that person. Oh, very good, huh? Very good. Why? Bringing money. Anyone who brings money will always control, right? So, foreign trade policy is mainly designed towards exports. Duty exemption schemes and duty remission schemes. What is exemption? Exemption means what? Exempt. I exempt you from giving this subject in CAIB. You will be definitely pass. If you are an, let's say, CA, then you will be exempted from giving, let's say, BFM. You need not give. All will say, sir, I am CA. I don't want to give BFM. Isn't it? It's that difficult. BFM is one of the most difficult, in fact, the most difficult subject, the most in your CIB. So, exemption means do not give, do not pay. You are exempted from paying income tax if you have 15G form. What does it mean? 15G, 15H, right? Exemption, do not pay. Okay? Similarly, duty remission scheme. Remission means what? You pay first and get it back later. First you pay now, then I'll give you back. Okay? Like this subsidies. Okay? Subsidies, some of the subsidies are direct in this form. Many of the subsidies are in this form. Alright? You first pay, then you get it back. Like that PMEGP scheme. Okay, or many of the government schemes are in this form. First you show that housing benefit which you get for 2 lakh. Okay, so Pradhan Mantri Awas. First you pay the EMI, and then after 2 years, looking at your overall performance, they will give you, isn't it? So, duty exemption schemes. What are these? Advance authorization scheme. See, here I have covered the main hero schemes I will cover. There are many schemes, but in given time we can cover only main ones which are asked in the exams. Advance authorization scheme. Number 1. Duty free import authorization. Number 2. See this. In both of them, you don't have to pay anything. Advance authorization scheme means first only I authorize you. You sell this, you won't have to pay anything. Or if you import something, see, AS is applicable to imports also. If you are importing some machinery on which the production will be done later and goods will be sold, exported, then you can import it for a lesser cost without paying this duty, something like that. Duty free import authorizations. Okay. Then duty remission scheme, duty drawback scheme, and rebate on state and central taxes and levies. So these are all later. Okay. These are all later. Got it? So duty drawback scheme means first you have to pay, then you will get it later. On this, bank also finances, because duty drawback requires around 3-4 months, sometimes 6 months also. So up to that time, bank will finance duty drawback. This is post shipment finance. Rebate on state and central taxes and levies. So whatever state taxes are there, some other taxes are there, some charges are there, those are reverted back, but that is done later. Okay. Now what are the export promotion schemes? Look at these. Read this first. Read all these export promotion schemes. First is road tax. What is road tax? Reimbursement of central, state and local taxes and duties. Okay. Reimbursement, basically it is a reimbursement scheme. Reimbursement of central, state and local taxes. Very simple logic. See, whatever are the local taxes, those will be reimbursed back to you. You have to pay it first and then they will be reimbursed back. Okay. Second is SEIS. Now SEIS name only suggests services. This scheme is for services. So promotion of service exports. Whatever are your service exports, so for them the duties are again exempted. Many tax this tax benefits are given to you. Okay. MEIS, now this is scheme for mercantile exports, now replaced by road tax. So now this scheme is gone. So now this scheme has been merged into this road tax. Okay. EPCG facilitates zero duty import or domestic procurement of capital goods. Okay. Export promotion capital goods, that is the full meaning. Export promotion. Okay. For that, capital goods. See, what do you mean by this? Procurement of capital goods. Means if I have to purchase a machinery, see, now this will be on imports. Here we are studying exports, but this is given on imports. You will say, how is this mixing? This is import and we are studying export. So it is like this. See, this is a machinery which I will import. Machinery. Okay, machinery. I'll import. So this is a import. Import. So government is giving me, on this import it is giving me few benefits. Duty free. No customs duty. Now we are seeing this customs duty in a Trump 500% tariff, 250% tariff on China, then again back. Go back like this, go back 250% tariff. 3 months I have withdrawn. On Bharat, 500% tariff. Here just now announced 500. Now afterwards what will you do? Again back. Back. No. Deal is done. Deal, sign the deal. So that is all this customs. Okay. So our government, Bharat, is allowing procurement of capital goods at 0% import duty. Okay, but there is a condition to this. The condition is this import which you do, you will have to produce the goods, do the exports, means produce and export. produce and export, this will be required over here. Okay, export is also used. There are limits given to each one. So this is basically EPCG, although this is for import, but ultimately it will help in exports. Okay. Duty exemption or remission schemes, what are these? Look at this. Advance authorization. What is AA? Duty free import of inputs for export production. Now what do you mean by this? What is the difference between this scheme and the earlier one just now which we studied, this machinery part? See, this was for capital goods. Capital means machinery. Machinery, big machinery. This scheme is for inputs. So this will cover raw material. Raw material. Suppose if I have to purchase a raw material which will help me in exports. So government is allowing this to do the import of the raw material at 0% duty. Now you will say, what is this, sir? We don't understand anything. We are bankers. Mobile phone production, make in India, or many of the mobiles, Apple and everything are produced in India. We get the components of these mobiles, some batteries from various countries. It can be China, it can be Taiwan, it can be other, Germany, something, many countries. So we have to get the inputs or raw material from that. So those raw materials are purchased at a lower cost, and they are then manufactured, assembled together, okay, over here. So kindly note, and you will say, sir, then what is make in India? Everything is brought from outside and then we are just assembling it. But remember, same thing happens in every country. See here, the one who is good in something, you must purchase it from them at a lower cost. Kindly note this, okay. Suppose if, let's say, in your house, you say that, okay, I will do the plumbing work also, I will do the electrical work also, I will do this flooring work also, I will do the construction work also, I will do cooking also. Is it possible for you? Is it possible? It's not possible. There are specialists for that. There is a plumber, there is for cooking, there is a separate lady, okay, who does it. Plumber is separate, flooring is separate, construction is separate. We have to get the services from them. Same logic goes over here. I'll say I'll make in India mobile. I will manufacture this chip also. I'll manufacture this display also. I'll manufacture this also, that also. Not possible. Business doesn't work this way. Okay. So you have to get it, the raw material you have to get it from all the countries. Okay, all the countries, because then only the business will exist in the world. Okay, if I say everything is mine, then I will become North Korea. Everything is mine. Anda bhi mera, murgi bhi meri, omelette bhi meri, hamara Bajaj. Remember this? That andaz apna apna. Remember this, everyone? Then this doesn't happen like this. Okay, so next. Advance authorization for annual requirement. Now what is this? This is similar one. Advance authorization scheme similar to this, but on annual basis, only for select group of exporters. So same scheme is there, but this is for select group of exporters. Now who is this select group? Now this select group means, see this, it is like this. Suppose if it is Reliance, let's say, see the difference between this and this. This is for you and me who do some export. Today I'll do something, then after 6 months I'll do something, after 5 months I'll do something. This is for the companies, big companies like Reliance, Tata, or even this Apple. Now Apple is India is the biggest exporter of mobile phones. Huh? Kindly note this. Apple phones are made hugely in our country now. So these big companies, they will give the budget to the government. See, in the year we will be producing these many goods. For that, this much requirement will be there. You give me right now only. Every time I won't come to you. So this is a scheme on annual requirement for big companies. Select, see this word, select exporters. Then DFIA, exemption of basic customs duty on input imports made post export. Okay, so exempt on customs. See, everywhere, what can government do? You tell me. Government can give you internal subsidy, government can give you external subsidy. External subsidy means all this duty free imports. Okay, and if you do the exports, it can reduce the custom duties. It can't reduce your manufacturing cost. Your manufacturing cost you will have to bear. That's what you have to look at, how to reduce that cost. Government can give you the aid, customs duty reduction, taxes reduction, like this. What is in their hands they can do. Suppose if you say, sir, that raw material is costing heavily from, I am bringing it from, let's say, China, that is costing me heavily. But government can't do anything in that. Max to max, what can it do? It can reduce the import duty on it. But basic cost, you will have to pay. Isn't it? For that, bank is there to finance, isn't it? So exemptions from basic customs duty on input imports made post export. Okay, duty drawback, refund of customs and central excise duties paid on inputs. Okay, a refund of customs and central excise duties. See, again the same thing. So duty drawback is always given later. Duty drawback is never given first. Kindly note. Duty drawback, you always get it later. Okay, later means first you will have to pay, then you get it from the central government later. But for that, in the meantime, what happens? Suppose this duty is too much. Suppose, let's say you are Reliance or you are Tata, you are, let's say, Airtel or big company, any big company, Mahindra. Okay, in that case, what will happen? This duty goes in crores, lakhs of crores. So this much money is locked. This money gets locked. Okay, in the government. So government will give them later. Let's say after 3 months, 4 months. But 3 months, imagine 200 crores of yours are locked in duty. So what will happen? In this case, bank comes for financing. Bank will do the post shipment finance. Post shipment. Okay, so there is a post shipment finance product for duty drawback also. Got it? So that the liquidity of that customer is not hampered. Got it? Then ROSCTL, tax rebate scheme specific to textile and apparel sector to be merged with RoadTap. So again, this is merged with RoadTap. So leave this. RoadTap is above. Okay. So these all, many of the schemes are now merged with RoadTap. Because RoadTap has become the umbrella, and it is good thing. Why to have too many schemes, isn't it? So, exports from India scheme. Now, what is this exports from India scheme? Mercantile exports from India scheme, MEIS. Mercantile, look at this word, mercantile. Mercantile means producing something. Kindly note, there are two types of exports. Okay. Exports are of two types. One is services, and second is merchandise, means goods. You can call it merchandise or goods. Okay, merchandise or goods. Okay, means you can call this goods. Both mean one and the same. So this scheme is for merchandise. See, this services means whatever you are doing in banking, IT, banking, doctor, CA, consultant, all these services. So merchandise exports, okay, from India scheme. Service exports from India scheme. See, this is also there. So this is for the service export. So who will give the service? See, services can be given by anyone. Nowadays we have back offices, right, in our country. Various foreign banks, big companies, even the big IT companies in US are having the back offices over here. So these are called as services exports. Okay. In few years we will be having many other back offices. Okay. So this is related to services. So export scheme from India. Okay. Duty exemption remission schemes. What are these? See this advance authorization. Already we have discussed this. Means first only you need not pay. Okay, this is you need not pay. Second, advance license for annual requirement. Same thing. Ambani and all these figures names I gave you. DIFA scheme. Okay. So this is for import. Then duty drawback scheme. Okay. ROSCTL. Now this is merged. RoadTep. This is merged with RoadTep. Okay. Then this export promotion capital goods scheme. EPCG. Capital goods. Look at this. Capital goods means machinery. Kindly note. So zero duty EPCG scheme. EOU, EHTP, STP, BTP schemes. What are all this? See this. Zero duty EPCG scheme, already this we have discussed that capital goods whenever they are imported, government gives you exemption in that so that you make the production and sell it, export it outside. What is this EOU? Export oriented unit. What is this EHTP? Again, it's an export oriented unit only. Okay. These are all the various names. STP, okay, BTP, these are all the export houses, okay. So these are the schemes for export promotion capital goods scheme. You can study them in details. In the paid classes, we'll be discussing them in details, okay. Now, what is one of the main facilities given by the banks, okay, for exporters or even by the government? One is buyer's credit, second is supplier's credit. Okay, two types of credits are there. Buyer's credit and supplier's credit. Now, what do you mean by this? What is this buyer's credit? What is this supplier's credit? Look at this. I'll explain you first and then we'll look at the image. Kindly note, suppose let's say there is a buyer in our country, let's say Bharat. Now, let's call our country as Bharat, not India. Okay. India was a name given by the Britishers. Our real name was Bharat. So let's call us Bharat. Okay. So let's say there is a buyer in Bharat over here who wants to purchase some goods, any goods from any other country. Now what happens? There is a seller in USA. This seller in USA wants to sell the goods. Okay. He is ready to sell. He or she. See here, he is not a right word nowadays. He or she, because it can be a female also. So seller is ready to sell the goods. Okay. For convenience, we'll call it he only. Huh? Consider. Ladies, please excuse. Okay. So seller, nothing injustice to anyone. Huh? So seller is ready to sell. But now there is a problem. The problem is seller says, see, I don't trust you here. I don't trust you. What you have done, what will you give me the money? I don't know. You will buy the goods and won't give you the money. In that case, what will happen? This seller tells that, see, what you do, before I'll send you the goods, you give me a guarantee. You give me a guarantee. From whom? From your well-known bank in your country. Well-known bank in your country. So you'll say, what is this well-known bank? Let's say SBI, PNB, Bank of Baroda, any big bank. Any big nationalized bank or private bank also. So this case, what will happen? This SBI will give a guarantee. See, only example I am giving SBI. It can be any other bank. So this bank will give a guarantee to the seller that you send the goods to this guy. What is the payment term? Payment term is, let's say, after 3 months, I'll make the payment. This buyer is saying, I'll make the payment after 3 months. So here SBI will say that, see, don't worry. After 3 months, I will pay. You don't worry. Don't look at him. You just send the goods to him, I will pay. What does this mean now? This seller has got an assurance now from the bank that, see, if I do this, I'll definitely get the payment. Because this big bank is telling me or giving me in writing. Telling me means, after all, it's in documentation. So that is known as supplier's credit. Now, some doubt might arise in your mind. Why should the bank tell this? Or why will the bank take the guarantee of this customer? Because He is a regular customer of this bank. Bank might be having various limits of this guy, or even bank will be having a FD of this person. Anything can share. The relationship can be anything. Suppose if there is a good customer, big customer with you, let's say Tata, Reliance, you are in the bank. Will you say no to this guy? You will be having relationships with this guy, many other relationships, isn't it? So based on that, bank will give the guarantee. This is known as supplier's credit. And on the due date, actually bank pays. Bank will pay to this supplier. Okay? And who will pay to this bank? Obviously this buyer, isn't it? So this is supplier's credit, where the bank, now look at this point, important point over here. In supplier's credit, the payment is received by the seller. See, the seller will receive the payment after this given period only. 3 months, suppose if it is guaranteed. Then after 3 months, he will receive the payment. Okay, that is the point. Payment will be received after 3 months, either from him or from him. But after 3 months, not immediately. Okay, that is supplier's credit. Now there is a problem now. What is the problem? The problem is this supplier says, I don't care for you. I don't care for your bank. I don't care for anyone. I want cash right now. I am not ready to wait for 3 months. You will give me after 3 months. Who will wait for 3 months? My money is locked for 3 months. Forget it. I want cash right now, or leave it. What will you do in this case? In this case, you will go for buyer's credit. Now, what is buyer's credit then? Same relationship. See this, seller in USA, buyer in Bharat. Okay. Now look at the change. This supplier wants cash. So what will this supplier say? I want cash. I won't give you. This buyer will do what? Buyer will go to his bank. Let's say again SBI. Now he will tell SBI, sir, this customer is not ready to give any credit. He wants cash only. Okay, so what will happen? SBI will say, okay, no problem. SBI will contact HSBC. Means again, example, it can be any bank. HSBC, Citibank, Dredsner, or American Express, any bank. Okay, or its own branch. Why all these? Why should I go for these foreign banks? SBI will have their own branch in SBI New York. Why not? So SBI will contact SBI New York. Okay, and it will tell them that, see, this guy wants cash. You give him cash right now. Right now you give him cash. And I will pay you after whatever is the agreed period. If it is 3 months, 3 months. If it is 1 month, 1 month. So SBI New York or this foreign bank will agree. They'll say, okay, we should get our interest. ब्याज मिलना मांगता है, बराबर? So interest, if I get it, what's the harm to me? So this bank will give the cash to this seller. This in Bharatiya Bank will give this money to the buyer to this bank after 1 month, and this buyer will pay. So everyone is happy, isn't it? So this is known as buyer's credit, in which the supplier gets the cash immediately, and supplier's credit, the supplier gets the cash after the due date. Okay, so this is known as supplier's credit. Okay, so these were the important points regarding the various facilities, and hope so you have enjoyed and understood this suppliers and buyer's credit. Very important term from your exam perspective. Now before going, everyone, I will suggest you to join the new batches ASAP. In the new batches, kindly note, see this, go to Adda 24/7. Always purchase the batches through the app. Download the app first and then purchase. Okay? Go for the batches. See, go to JAIIB CAIIB. Click on CAIIB December. Now you will see these Mahapacks. CAIIB Mahapack, Increment Mahapack. Purchase these 2 Mahapacks, any of these. Okay? In Increment Mahapack, the best deal is, this is the best one. Because here you get physical books also, here you get e-books also, both of them. If you want to study online, study online. Suppose if you get bored, eyes, train. So leave this, take the books, physical books. So here you get both the options. Take this. Plus you get 15 plus batches per subject. Now that is available in both of them. Okay. Right now you are getting double validity. Means, look at this. You buy for 8 months, you get it for 16 months. You buy for 12 months, you get it for 24 months. Plus, now this is not the only offer. You are getting discounts also. Look at this. This. Put the code Y432. See, this code is very important. Y432. Okay. See this. 80% discount you are getting plus 1% extra. So 81% discount you are getting. 81% discount. Huge. Okay. So 81% discount plus this double validity. So it's a win-win situation. Everyone must join this Mahapack and the new batches also. The new batches have just now started. Increment Pro batch. Okay, just now it has started. See this. Increment Pro batch. Okay, just now it is starting. Just starting only. Join this ASAP. All the compulsory subjects are covered. Here you get 81% discount, but don't forget Y432 and download through the app. Okay.